Yo, everyone, welcome back to another video. Today is a breaker structure, or you might see it as chotch, which basically means change of character. Um, yeah, another little episode in this little mini free course I'm doing. So if you haven't already, go and check the playlist. It's literally called Free Course on my channel, and have a look, man. Get familiar with the shit. So without further ado, let's get into it. Right. So a breaker structure, also known as a BOS, as you can see over here, or a change character, is a shift of market structure. For example, making a lower high after an uptrend or a higher high after a downtrend. And what I mean, a lower low. I should probably change that. Yeah, a lower high and a lower low. Confusing myself there. Pretty much, if you can't tell, just look at these for now. So obviously in an uptrend, you're making higher highs, higher lows, higher highs, higher lows, higher highs. We fail to create a higher low because we make a lower low. So now the market has shifted structure. This is the breaker structure, okay? Because we're not continuing the trend of an uptrend. We're now in a downtrend because we've changed the structure, made lower lows. And we should have been making a higher low, okay? Clear. So it tells us that a trend continuation is going to occur to whichever side that price had broken structure. So pretty much, if we break structure to the downside, I'm going to be looking for a fair value gap after that to get tapped in to continue down. Same as if we broke to the upside, I'm going to wait for a fair value gap to get filled to 50% to carry on upwards. Now, we can then use this as our third confluence to confidently enter a trade setup. So obviously the first one being liquidity sweep. It's not third confluence, sorry. Liquidity sweep, breaker structure, which would be the second. So we need to change that. Second, that's going to piss me off. Let's make that bold. Yeah, there we go. So obviously, liquidity sweep comes first before anything. Breaker structure, then a fair value gap. You can actually add other things in like equilibrium and shit like that, but I don't tend to use that. This is what I'm teaching you guys. This is how I trade. So that's literally what I'm going to be teaching you. I'm not teaching you anything else that I don't do because I don't want to either put misinformation out there or, say someone tries this and they go, oh, you fucking shit at trading, which isn't the case. Anyway, so in an uptrend, a break structure happens when price breaks below the previous higher low, signaling, that should be 2 L's, a potential shift to a downtrend, and then vice versa. In a downtrend, a breaker structure occurs when price breaks above the previous lower high, indicating a possible move into an uptrend. Now, with that being said, let's jump on the charts and find some examples, of a breaker structure. Let's go to, say, the hourly for this. Right, so here's a pretty simple trend, okay? Got a high, got a low. Lower high, lower low. Lower high, lower low, lower high, lower low. Lower high, lower low. Just about lower high, lower low. Okay, so you can quite clearly see this is a downtrend. Yeah? Everyone's agreeing with that, okay? So, if we break above this point, which is the last lower high, you probably see this sort of continuation. Why? Because we've broke structure, change of structure, shift in market structure, or a change of character. So we're no longer making lower highs and lower lows, we're making higher highs. Hence, that being the breaker structure. Okay? Easy enough. So let's look for here we go. Right. If you can hear music in the background, guys, my fucking window's open. So, sorry about that. Here we go. So we got a low and a high. Higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher low there, higher high, higher low, higher high, higher low, higher high. You get the gist of it, right? So, you can quite clearly see it's an uptrend. Okay, but do we continue that pattern of an uptrend making highs and lows, higher highs and higher lows? No. Why don't we? Because if we've got a low here, what do we see? Price comes down, makes a lower low. So that uptrend is now finished. This is your breaker structure. Yeah? Simple shit, man. This is probably going to be a short video because there's not really a lot to discuss about breaker structure. It's pretty straightforward. Like, you should get this pretty simple. But again, like I keep saying in the other videos, if you need me to go over it again, then I will. Just comment it, or say like, stop fucking rushing, show us more. Just let me know, man, and we can do it. Again, what did we see? Hello, high, lower high. It's not really a lower low, but you got a lower low here. Lower high, lower low. You actually make a higher high here, but then you make a lower low. So this was probably news, maybe. And then what happens? So we've got the low there, we've got a lower high here. What happens? Do we continue down? No, we don't. Why? Because we break structure to the upside, because we're making higher highs now instead of lower highs. Okay? And higher lows. This is your higher high, higher low, higher high, higher low. Okay? Pretty simple. Probably going to be a really, really short video. My dog's barking. I need to let the dog out. So, yeah. Same sort of thing again. Just a few more examples. Low, high, higher low, higher high, higher low, equal high. But then, do we carry on a higher high or a higher low? No, we don't, because there's your low. What happens? Break of structure makes a lower high and lower lows. Okay, so this is your break of structure. Hopefully, that's pretty simple. There's not really too much to, say about it because it's pretty simple, guys. But if you need another video, let me know and I will get that out ASAP. Just let me know, guys.